Most people think investing is just about picking stocks or buying index funds. But the truth is, how you invest changes dramatically as your capital grows. The decisions, the opportunities, the risks, and even the way you think about money evolve at each stage. Today, we're breaking down the 8 levels of an investor, from your very first $500 to managing billions. Let's start at the beginning. Level 1. Beginner Investor. You open your first investment account. The screen looks simple, but nothing feels simple. You deposit your first $500. Money that actually matters to you. You buy a stock or an index fund. For the first time, you're not just watching prices move. You're owning a small piece of something real. At this stage, your returns are small. That's okay. What matters is learning how markets actually work, how companies make money, and how ownership compounds over time. You stop reacting to every movement and start thinking longer term. Level 2, Retail Investor. You start investing consistently every month, $500, $1,000, whatever you can afford. You set up automatic contributions. Your portfolio starts taking shape. You learn what diversification really means, not just owning many stocks, but owning assets that behave differently when conditions change. The market drops, sometimes significantly. This is your first real test. You don't sell, because you've learned something important. Volatility is not the same as risk. Selling at the wrong time is. You're practicing dollar-cost averaging, building exposure over time instead of trying to time the market. Level 3. Consistent Investor. Your portfolio crosses $100,000. A 1% move is no longer abstract. It's real money. You become more structured. You set a target asset allocation, for example, 70% stocks, 20% bonds, 10% cash, and you actually stick to it. You start rebalancing instead of reacting emotionally. You pay more attention to risk-adjusted returns, not just how much you make, but how much risk you take to make it. Your behavior becomes consistent. Success at this level isn't about picking the perfect stock. It's about executing the same disciplined process over many years. Level 4, Advanced Investor. Your portfolio grows to $250,000 to $1 million. Small improvements now make a real difference. You move beyond basic allocation. You start thinking about tax efficiency, placing the right investments in the right accounts, using tax loss harvesting, and holding assets long enough for better tax treatment. You evaluate opportunities based on both upside potential and downside risk. Avoiding major losses becomes just as important as generating returns. Investing is no longer just about individual decisions. It's about building a system that performs across different market environments. Level 5, High Net Worth Investor. Your investable assets cross $1 million. The financial system starts treating you differently. New opportunities appear: private equity, venture capital deals, real estate syndications. These aren't available to everyone. They often require larger minimums and longer holding periods. Your portfolio becomes more complex. You now allocate across public markets and private investments with specific roles: growth, income, and capital preservation. At this level, the challenge isn't access anymore. It's selection and proper structuring. Level 6, Professional Investor. Your capital reaches $10 million to $100 million. Investing is no longer something you do on the side. It becomes a primary function. You manage your portfolio more actively, not through frequent trading, but through structured decision-making. You diversify across multiple asset classes with clear purposes. You may set up a family office or formal investment entity to manage taxes, reporting, and allocations more efficiently. Performance is now measured seriously against benchmarks. Avoiding large drawdowns becomes critical because at this scale, big losses are much harder to recover from. Level 7, Institutional Investor. Your capital moves into the hundreds of millions or billions, either through a fund, family office, or institutional structure. You're no longer just picking investments. You're deciding where large pools of capital get deployed. You invest through managers as much as you invest directly. Due diligence becomes critical. A single allocation can involve tens or hundreds of millions. Your capital begins to influence outcomes. Large commitments can support companies, sectors, or strategies. When you move, others often follow. Level 8. Billionaire investor. Your net worth crosses $1 billion. At this scale, you're no longer thinking in portfolios. You're thinking in positions, investments of hundreds of millions or even billions into single ideas or companies. You participate in major acquisitions and strategic investments. Public markets are still relevant, but private deals dominate. Your decisions carry visible impact. When you take a position, the market reacts. Liquidity becomes strategic. You move deliberately because moving too fast can affect prices. At this level, investing is no longer just about returns. It's about influence, where capital flows, which companies grow, and which industries expand. Because at this scale, you're not just participating in markets. You're helping shape them. The way you invest changes completely as your capital grows. What works at $10,000 won't be enough at $10 million. And what works at $10 million looks completely different at $1 billion. The real evolution isn't just about more money. It's about how your relationship with risk, time, control, and responsibility changes at each stage. If this video gave you a clearer picture of how investing evolves with wealth, hit that like button and subscribe. Drop a comment below. Which level do you think you're closest to right now? Or which one are you aiming for? The goal isn't just to grow your money. It's to grow into the kind of investor your capital requires. I'll see you in the next one.